We'll now turn to a subject that for most people over the age of 25 anyway, still epitomizes the word media. Television has not just survived the digital revolution, but it's thriving. And thanks in part to the continuous evolution, including programming, distribution channels, and most importantly, the business models that support them. Bob Bakish of Viacom and Kumar of India's Network 18 are no strangers to the brave new world of television or to each other, as a matter of fact. Their companies have been involved in an ongoing partnership, simultaneously both global and local, and in many important ways define big-time broadcasting in the 21st century. And to lead the conversation, we've invited Yusuf Gamaluddin, a familiar face to many of you for his role as both an anchor and Middle East correspondent for CNBC. So over to you, Yusuf.
Thank you very much. It's good to see that the sound level is working. Get a bit comfortable with that. All right, hello and welcome, and thank you for coming. It's great to see you all here. I'm not sure how many of you made the drive from Dubai this morning, but I'm definitely fortunate to be here today. That's as much as I can say, with the fog and some of the challenges on the road. My name is Yusuf Gamaluddin. I'm an anchor and regional correspondent for CNBC, and we have a very exciting topic that we're going to talk about here at the Abu Dhabi Media Summit. And I guess the best way to start this off is by mentioning the actual buzzword, which is globalization. And traditionally, the way this term has been seen is taking global content and catering to local audiences. But what we've seen recently as well is that a lot of the local content is being taken and distributed globally to the needs of other audiences around the world. So that's a very fascinating development. Obviously, there are a lot of opportunities and a lot of risks that come with that. And I think we have a fantastic lineup for our panel today to sort of shed light on this sort of ecology of localization. The team here from Viacom 18, two companies that basically signed the deal. We have on your right, Bob Bakish, the president and CEO of Viacom International Media Networks, which is a unit of Viacom Inc. And on his side is Kumar, the group CEO of Network 18, which is one of India's largest media groups. Thank you both for being here. And again, you have a partnership where you really leverage the powers and the influence that you both have in your respective markets. Let's go to the beginning of that partnership a little bit. Who approached who? And don't tell me it happened on the golf course.
No, it didn't happen on the golf course. Let me say first, it's great to be back in Abu Dhabi at the Media Summit. Always a place for thoughtful conversation and a great room of attendees. So great to be here. As far as Viacom 18 goes, probably back in 2006, as we were looking as Viacom at international growth and looking at countries like so many companies do, we decided we wanted to have a larger play in India. And we decided that for, one could argue, some pretty obvious reasons. Very large population, largely speaking, business-friendly culture. In other words, the market was accessible. And really good growth both from a GDP perspective and from an industry perspective. And probably lastly, unlike some other large emerging markets, it was a very well-established television business there. Yeah. So the rules of the game were pretty clear, et cetera. So we decided we wanted to step up our game in India. We had a small owned and operated operations at Nickelodeon, Comedy Central, and VH1. Stepping up the game meant getting into the general entertainment business. As we contemplated that, we decided, for a bunch of reasons, we wanted to do it in partnership. And so we went out and talked with a range of companies and ultimately met the folks at Network 18 and really found a very compatible dialogue, very entrepreneurial company. Top flight media company, understood brands, they work with the CNBC brand, among others, in India. So we felt good about it, and ultimately, deals are harder to get done than just walking out on a golf course.
Oh, that's at least how we like to think of it. Sai, how did you see this whole operation come together? I mean, now Viacom Sports, Viacom 18 Sports, quite a broad portfolio of brands, right? From MTV all the way to Comedy Central. Sort of just talk us through this a little bit.
Well, before that, I'd just like to say that my market information suggests that Viacom did go to a lot of golf courses. It's just that, no one in our management team played golf, so we called them directly to the boardroom and did the deal.
Well, I'm glad we're able to dispel that myth right at the top. So.
very quickly, you see, as Bob was saying, when the partnership opportunity came in, we were just a news broadcaster, but we had partnerships and fairly successful partnerships with CNBC and CNN, and we sensed the opportunity in getting a mix of global brands with local management, local content, and so on. But we had not seen anything of the scale of the Viacom opportunity. And frankly, that was a bit scary way back in 2007, because what we were taking on were players established way back in 1995. The big league was formed in 1995. There was the Z Group, the Murdoch Group, and so on. And many tried making that journey, and here we were, because we certainly couldn't make the journey alone, and needed two of us to really make the cut. And for the first time, and we're a first-generation entrepreneur-run company, not really with deep pockets like Viacom.
Yeah.
So we had to take a big bet, because we were buying into the existing Viacom operation of MTV, VH1, and Nick. But as luck would have it, a lot of effort went into it. I thought there was a lot of alignment between partners. We made the cut in colors, and we entered the big league. Coming to your question, after that, I think once we entered the big boys club, and that was, I would like to believe, 1.0, stage 1.0 of the relationship was to get up there. And once we got up there, we entered stage 2.0. Which was then about becoming a full-fledged entertainment booking.
Perhaps we can sort of delve a little bit into the term of globalization and how your partnership fits into that model. I mean, just tracing the roots of the word, you see some momentum in sort of academia, sort of the late 90s, when people start to play around with that term. How would you describe globalization as a term, and how does the partnership reflect that buzzword?
Well, so global and local. It's very much what Viacom International Media Networks is about. We are a hybrid. We serve specialized audiences all over the world, and we do that by accessing, really an entertainment pipeline of scale, which includes, shows across brands that we share. But we also, very much believe in localization. So in the case of Viacom 18, you have a situation where you brought together a fantastic local entrepreneurial company in Network 18. With Viacom, which diversified media company. In the form of the partnership, it very much is a 50-50 venture. We equally contribute, and I think its success has been driven by a common vision that, as Sai said, we wanted to be a top player. And by the way, in doing so, we had a strategy to be a top player. We said we want a differentiated position. We took a little edgier position with colors than Star and Z had. We said we want to have a top flight management team, and we were willing to invest the resources to get it. And we wanted to back it up with very strong slate of programming, including a strong original local slate. So Viacom brought with it certainly wherewithal and expertise and formats, and obviously MTV and Nick and comedy on an O&O basis and on their pipelines. And then we added that local component, right? We took some of that local component with formats like, it's called Big Boss in India, but it's Big Brother, which is an end-to-end format and a localized version. And some of that, which continues to be true today, is true local, I call them Bollywood novellas, but it really is that fusion of global expertise and formats with local connection and production, and that is certainly the secret to Viacom 18's success.
Let's build on that a little bit. Ladies and gentlemen, of course, a reminder that we are happy to take your questions, and we do want you to get involved. This is a conversation between us all, but just to build on that point a little bit, you launched the Rishte channel, which is a Hindi entertainment channel, and Colors, which started in India, and Bob, you mentioned this as well, which is now available in the UK and in Canada. Would you say that, and the Middle East now, would you say that that is an example of a globalization of Indian culture? I mean, as we talk about globalization, is this the local pushing outwards to the global?
Absolutely. And we were here last evening in this region celebrating 2 years of Colors. I think at a fundamental level, we looked at our partnership and said that we started off by coming together to talk to audiences in India. And then we changed that filter, and we changed the lens and said, now let's look at Indian audiences across the world. And that's when we said, are we structured to look at that opportunity? And we said maybe not. And that's what led us to 3.0 of the relationship, which was forming a content monetization engine, which is a whole new partnership between us and Viacom called IndiaCast. Now, IndiaCast takes a step back from the broadcast network and the channels of Viacom and Network 18, and it just looks at content and says, how can I repackage this content in linear or non-linear formats and take it to Indian audiences across geographies and across media? So Rishte is a brand that we don't even run in India. Rishte was an opportunity where we said that we already have colors in the UK market, but we saw appetite in the UK market. Colors was a pay franchise. We saw appetite and an opportunity in an ad-funded channel. So we looked at the programming library of MTV India and Colors and Nick and so on, and created a whole new channel for the UK market, and it's off to a commendable start. And guess what? We may now be launching Rishte back in India. So it's almost coming full circle. We started launching original channels globally and then bringing them back to India. And we've got a lot of help from Viacom because of the distribution strength across the board.
I mean, obviously, the idea of localization is one that affects not just India and your respective markets, but it's something that is relevant to developing and emerging markets. Bob, how would you describe the adoption of content from India in the markets that Viacom oversees? I mean, much of it has to do with the diasporas that live there, but have you seen also an interest from other ethnic groups and sort of a real melting pot of cultures and basically opening up to fresh ideas and fresh content as well?
Sure. As Sai was saying, one of the great opportunities associated with the creation of Viacom 18 was ultimately leveraging that killer content outside of India. And ergo, the distribution of Optica Colors in the United States, which, by the way, is distributed by the U.S. Viacom sales force, which has relationships with distributors, et cetera. And also, I think we're in 60-plus countries now with Colors. So that opportunity to export Indian content to Indian audiences around the world is a big deal. And I think we're still really in the early days of it. So, we talked about global. People tend to think of a global company going local. This is that coming back the other way. It's taking that local focus and expanding it globally. And now you're seeing, so the content is distributed not only for Indian audiences, but I think we're at the very, very early days of even a wider aperture. Probably the best example of this is if you look at Eastern Europe, where sure, you have U.S. content in Eastern Europe. You also have a lot of the LATAM novellas, which were sort of in early days kind of broke into there. Now you're seeing other top quality content going there, including Indian, Korean dramas, etc. But the common thread of it is you have to have world-class content. And the thing that's exciting about Viacom 18, and was really one of the bedrock things we wanted to accomplish from the start, is we wanted to create world-class content for Indians in India. And the reason we had to have a general entertainment network was we wanted to make sure the entity was able to fund itself to perpetuate the creation of world-class content. And again, once you have world-class content, distribution and cultures today are such that you can export it, whether it's to television platforms, be it in pay TV or syndication on terrestrial. Again, the Rishte example is interesting because it speaks to the importance of local execution. The opportunity was to unlock more of our library in a medium that we weren't currently distributing to, which was FreeSat. Colors was in pay TV. But there was an audience accessible in FreeSat that we weren't serving, an Indian audience that we weren't serving, and we had the content to do it.
The critics of let's try this again. The critics of globalization, they'll say that this is an example of, cultural imperialism. That the content flow is really a one-way flow from west to east, from developed markets to developing markets. Sai, would you say that the content is balanced out if you compare it, the local and what's coming in from the global? How do you respond to people who say that?
Absolutely. I think at a fundamental level, the true test of great content and cult brands is their ability to transgress boundaries. That's the true test of a brand, and it doesn't matter whether the brand is founded in the US or in India or in the Middle East. You have examples galore, from Rishte to the fact that Bob was saying Colors is distributed in more than 60 countries, but the programming of Colors is distributed in more than 120 countries. Today, about 7 to 8% of Bollywood box office comes in from worldwide markets, not from India. And it's tough to make money in the in the film business. So all of this money is great to have back home, but I believe that, to Bob's point, that this is not only focused on Indian communities abroad, but also in subcontinent communities, defined as adjacent communities, where the cultures are still a bit similar, the nuances are a bit similar. So, for example, a Hindi feed can move with a little bit of tweaking into an Arabic feed. It can, with a little bit of tweaking, look at Pakistani audiences, or audiences from the larger Indian subcontinent, be it Sri Lanka, be it Bangladesh, be it Afghanistan. And I think increasingly, at least back home in India, we see most broadcast players, especially at Viacom 18, not looking at ourselves as broadcast at all. We're looking at ourselves as content monetization engines, and broadcast is going to be one window, India is going to be one window.
Just to answer your question, I think historically it certainly was about Western content led by Hollywood studios moving around the world, including to emerging markets. The reality is the term emerging markets is a misleading and, quite frankly, outdated term. Because today what you have is, as long as you have world-class content, which is created by entities that have scale, you can distribute it, and you do distribute it in other markets. Right? And so that's where, and that's really the exciting thing probably about the next, I don't know, decade of entertainment programming, which is you are starting to see that, and I believe you'll continue to see that gather momentum, where great Indian content is just being distributed to Indian audiences and their constituents around the world. Same thing true for Eastern European programming, potentially once it gets to scale, Middle Eastern, because that's what people want. They want great content.
So you both seem quite happy with this partnership, and even in the conversation we had beforehand, it was all thumbs up. But perhaps you could shed some light on some of the challenges that you've faced in this journey, which has obviously brought you considerable benefits over the years. But if you had to share just some insight into what people should expect going into this, and where the tough times are going to be. Sorry.
You want me to go first? Okay. Well, let me break this into two parts. One is challenges that all of us face as operating guys, right? So we took Colors to #1, and there was a week when it fell to #4. But that's life. And as long as you're in the top bracket, you need to be in there. You need to huddle and get it right. But importantly, these are challenges that are easy to address if the basic fundamentals of the partnership is right. If your global partner is extremely aligned with your decisions, your views, and is able to live with continuing to give you a hell of a lot of freedom, and for that, I think we must openly give all the credit to Viacom, because they're finally about 8,000 miles away. But apart from the regular challenges, I think it's not that we've not had any, or it's not that we want to position all of this as hunky-dory, but I would go back to the formation of IndiaCast. I think the challenges for us were the shifting sands in the Indian market. Digitization was upon us. It's been historically an analog market where the broadcasters have been paying for getting carried, but now this was to change dramatically. We were not structured for that. Video consumption online was going up 100% year on year. YouTube in India, in the youth TG, is among the top 10 television channels in India. We weren't styled for all of that. I think that was an immense challenge, and we've been discussing these points for the last year or so. And it's just about 3 months back that we then agreed to face these challenges and come up with a whole new partnership, which is IndiaCast. So I just don't want to position this as hunky-dory, though.
Absolutely. I mean, this is what's really useful as well for our audience, and as well the people that I've spoken to have been involved in broad-based partnerships like this one have often struggled, and in many cases not made it work. Bob, what would you say was the secret to making this work?
Well, I think there's a couple things. One is we did share a common vision, and we did a lot of soul searching individually and together before we actually embarked on this journey. Two is clear communication. This is one where we have a board meeting tomorrow. I've been on boards that are largely symbolic, and you go through the motions. Our board meetings are really operating meetings. We talk about the real issues with the business. As Sai said, if you look at Viacom 18, there was an initial phase which was really all about the launch of colors. And quite frankly, we were more successful out of the gate than we anticipated, and certainly than we planned. That was great. But then the question comes, okay, now what? You have to look at opportunities. The most recent, and probably another instructive example was digitization. In the original business plan for the venture, digitization was really contemplated as a 2009 item, right? And you had projections associated with changing costs and revenues and all the things. Guess what? It didn't happen. Now, there were some stressful moments because that had to do with, wait a second, the business is not playing out exactly as we thought, for some very understandable reasons. But again, the key to navigating through that was excellent dialogue, and putting real issues on the table, having a first-rate management team that we look to for, okay guys, so what are we going to do about this? Ultimately, fast forward to today, with digitization happening and us deciding, to maximize this opportunity, we really need to get more scale than even we independently have on a content perspective, ergo the creation of IndiaCast. So, I think the key is common vision, great communications, an understanding that there are going to be sort of twists and turns in the road, and a commitment to continue to play it through. We have all of those at Viacom 18, and as a result of that, we have a successful venture.
So the platform is clearly in place for Viacom to continue to succeed. At least that's the takeaway that I have here. But where's the growth going to come from? Where are the gaps and in which markets? And also perhaps we could also look at what platforms this growth is going to come from. And in this rapidly changing media landscape where, drawing up something for longer than a year is quite challenging and courageous, to say the least. Sai, where do you see the opportunities here? Where is the money and the growth going to come from?
See, the point that Bob made a little earlier, I just want to stress on that. You see, there was a phase in the Indian broadcast market when you need to focus on viewership and leadership. Once that was established and once you're up there, and it was very important for us to be up there and established before digitization took over. I'll just leave you with a stat. We get about 10 to 15% of our distribution income. Only 10 to 15% of our revenues come from distribution. But what gets collected from the household should add up to about 50% of our revenues. Now that is what digitization is going to address. So we see material and tangible upside through digitization. Importantly, we pay to get carried, which really means that we don't even get that 12% really. If there's a cost to that 12%, if you add up that cost, we hardly get 5% of our revenues from distribution. I think that's going to fundamentally change the P&L of Viacom 18. The second point is that these global brands, most of the global brands on the Viacom stable, and perhaps even in the case of Colors and Sonic, which are not really Viacom brands, we believe they can be spliced and repackaged, and they could move into corners, niche corners, lucrative corners. For example, let's look at the kids space. We have Nick Jr., we have Nick Teens, we have Nick, and we have Sonic. That's 4 channels addressing kids. Yeah. That's something that's going to be huge in the Indian market. It's a market that today takes 70 channels per cable operator. That's going to move to 500 to 1,000 channels in the near future. At some stage today we're consolidating, but 2 years down the line we'll be under tremendous pressure to ensure that we have 40 channels put out there. And guess what? We have them today.
Bob, what's your take?
Well, I think you got 2 fundamental areas of growth. You have growth in the Indian market. This is a market with, a billion people, and it's a disaster. The GDP is only growing maybe in the 7s versus in the 10s. But fundamentally, this market, with the creation of a true middle class, with the build out of major cities, et cetera, has a lot of growth ahead of it. And as that growth is occurring, media growth is occurring, whether it's in the traditional pay television business enabled through digitization, or in adjacent businesses such as consumer products, or the broader digital media business and apps. So I'd say there's a lot of growth ahead in India. Not that it's not going to be competitive. It is competitive because a lot of people see the growth potential.
And it's quite a fragmented market as well. It's a very mature market in comparison to other countries in this part of the world or in this region. it's more difficult of a market to navigate, isn't it? Especially for people who are about to enter that market and not have the synergies that you have at the moment.
There's no question that being in the top of the pack gives some sustainable competitive advantage. That's why we wanted to get there. And certainly new entrants have a hard time getting there. And by the way, it wasn't like Colors was the first GE network launched since Star and Z got to be #1. It was just the first one that worked. So it's not a game for the faint of heart. But there's still a lot of growth ahead in India as we build out our bouquet, whether it's adding additional services for genres we already serve, like kids, or bringing new services to the market. We brought Comedy Central as an example to India in, I believe it was January of this year, and we will continue to grow that bouquet. The second area of growth is really this whole, call it, I don't know, export business, which is serving this Indian diaspora outside of India. You know, this is a small revenue stream for us today, but a decent margin. And what you're going to see is the magnitude of the revenues grow and the margin will grow. And so that will ultimately be a substantial value creation engine for Viacom 18. So there's a lot of growth ahead of this entity. It's why, you know, we continue to be very focused on it and you know, very happy with its success.
You know, I get up in the morning and I get excited about my stock charts. I get excited about my oil charts. But again, the current sort of macroeconomic environment is perhaps quite discouraging for many. And looking at the numbers, if you look at the mergers and acquisitions since the fallout of the financial crisis, the numbers have been dwindling, really. I mean, corporations are more and more hesitant to take exceeding risks. Would you say that these partnerships are the way forward, then, that it's taking on less risk, right, and avoiding sort of the burdens and the challenges of consolidation as well? What do you say, Sai?
One is that you can look at it 50-50 and say that they've reduced the economic risk. But I would still think that economic risk would be just one of the parameters. The big parameter is the risk of success, you know. And I think that's what would play in the minds of Network 18 or Viacom, you know, as they move further in any market. I think in media per se, and thankfully so, it does take too much to make a market entry. What it takes is look at Colors, for example. Colors tried to launch along with 5 other challenges for the top slot. The slot that was occupied for 20 years. All of them had deep pockets. The reason for success was not that, you know, not the fact that we had reduced economic risk. The reason for success was very different.
Bob, what's your sort of position on this? Again, I mean, again, our conversation beforehand, you already expressed that this is something you're quite keen on. Is this model the way forward for conglomerates like Viacom?
I think, like most things, it's difficult to generalize. There's a range of ways forward, and what's important is deciding the appropriate way forward for a specific situation. And the Indian market was a specific situation where, you know, we saw an opportunity to participate in its growth, and after evaluating what we thought it took for success, we decided partnership was the best way forward. I think that is a model which certainly can apply to other markets. It is not the only model, but you know, it is a model that we find quite interesting. We did it on a smaller scale last year when we created a joint venture in South Korea, you know, taking again our wholly owned businesses and folding them into a 50-50 joint venture. In this case, it was with SBS. And that venture also is doing very well and has addressed some distribution problems we had, et cetera. So I think absolutely that a partnership can be a very constructive way to grow a participation in the market. But it's, again, it is not for the faint of heart. You have to decide why you're doing it that way. You have to find a partner that shares a common vision and shares a commitment to great communications, because you know there will be tough times. And it is inevitable if you're going to be in the business in perpetuity, which we are. You know, we didn't create Viacom 18 to create some value, take it public, and get out. That's not what Viacom is in the media business. We are an owner and operator of media assets, and we intend to be, you know, long after someone I'm gone and someone else is running the business. So, you know, you need to find the right partnership situations. If you find them, then obviously they can work.
We keep focusing on the content, and perhaps just briefly, I'd like to shed some light on the marketing and the sales and how your approach to it has changed with that partnership. What sort of strategic takeaways can you come up with sort of from that perspective, sir?
You see, I think world over, if you come to ad sales in specific, the challenge really is consolidation on the buying side. I can speak with some amount of authority in the Indian market where 3 players grab about 60-65% of the buyer's market, on the buying side of the market. So that's always going to be a battle. So the challenge is how innovative can you get in your packaging, and how 360 could you get? I think we've had some sterling examples, especially with MTV, where you don't really get the show, but you get a lot of long tail of that show on the internet. You get a lot of it on Facebook and Twitter. You get a lot of it on MTVindia.com, and what the sponsor or the client ends up buying is not just broadcast, and that's the way to go. And we've seen that the premiums that we end up attracting by going the innovative route, or in a manner of speaking, the non-inventory, non-10-second route, is something that the team started doing about 5 years back, and I think we're ahead of the game there. But it's like any other market. Just focusing on inventory and yields is not going to be your answer to revenue optimization.
So Bob, how do you deal with this dynamism, and how do you see the future of marketing and sales in sort of the context of a changing content and localized content as well?
You know, sales and marketing is part of the portfolio capabilities you have in going to market. And, you know, it is very important because, as you say, you know, you can create great stuff, but ultimately people need to know about it, and you want to be able to create value from it, whether it's through distribution, through its ad sales, through its consumer products. And so, you know, we regularly evaluate how we're going to market. And, you know, IndiaCast is an example where we said there's a different way to go to market, which could unlock a greater benefit of scale. And actually do it in a multi-platform way versus just a linear TV way. That's a big difference, for example, in our IndiaCast joint venture versus how some other people go to market in India. You know, so, but you have to do it and say, why are you doing it? And does the right opportunity exist? There's examples where you might have been partnering in something and you decide to take it back and do it in-house yourself, because you decide that gives a more focus on a limited set of products, which in turn can extract more from them. So, you know, I think it's part of what you need to regularly evaluate and decide if there's an opportunity to optimize it. When you're going from in-source to outsource, you know, you have to be careful because those are big decisions. But I think that as we go forward, you know, all of us are going to have to continue to optimize how we market our product, how we sell it, what we do ourselves, what we do with partners, what we do with reps. You know, again, in the consumer products area, something we haven't talked about, you know, selling goods related to franchises. You know, there's an example where in some markets, in Russia, for example, we took our business and aligned it with a partner to great results. In Canada and in parts of Latin America, we made the decision to take it back and go direct, because we have a big enough portfolio that we felt with more attention from the retailers we could extract more, and those businesses have done very well in the last 12 months. So it's not a one-size-fits-all model. It's very much a regular evaluation of, given the specific situation, what's the best way to maximize the content.
I think this is a good way of sort of wrapping up this session as well. And Sai, let's start with you and how you see the future of globalization in a time where we have more individuation of tastes, where you're struggling to cater to individual needs. And let's face it, I've become more picky over the years, and I'm sure many other consumers of media feel the same way. How do you meet that challenge, and where is it going from here?
Well, to put it in a nutshell, I think we would have done a good job if we look at Viacom 18 and say that India is one of the countries that Viacom 18 operates in, and broadcast is one of our businesses. Because I think it's changing so rapidly in geography and medium of delivery that 3 years out, we need to see ourselves completely out, with broadcast just being one window. and India just being one of the destinations that Bob comes to for a board meeting. We should be doing board meetings in UK. We may have as many channels there.
We could do that.
Well, I'm glad this is sort of the space for fresh ideas for your board meeting tomorrow, right? Bob?
You know, there's some things that stay the same and there's some things that change. Okay, what stays the same, which is vitally important, is at the end of the day, people want to be entertained. The world's very complicated that we live in. There's a lot of stress. Sometimes it's just great to shut it all out and enjoy some entertainment programming. And as part of that, there are people, marketers, that need messages to be sent. You know, if you're selling a goods and a service, you need people to know about that. An entertainment product tends to be a good vehicle to do it. What changes is how people consume. You know, whether it's they used to only go to the theaters, to they got a black and white television, to they got a color, to high-def television. Now we see a multi-platform world, which introduces challenges because people have more choice, but also introduces opportunity because, you know, we used to have a product that could only be viewed on your parents' couch. Today, you know, if you're commuting in Tokyo on a subway, you can watch our linear content on your mobile device. Yeah. So, you know, as this business continues to evolve, you know, we too need to evolve with it. And those companies that continue to focus on attention, produce great content, and then look to be maximizing that will continue to do well. And that's what we're committed to worldwide.
Fantastic. Well, thank you very much, both. I want to open the floor up to questions now because I do want to engage the audience a little bit. This is not, just like we say that it's not just local, global, it shouldn't be, you know, it should be a two-way flow of communication. If we could just, we have a question right here. Do we have a floating mic yet? There we go. We got two on the way. Okay.
Hi, Shahid Khan, Chairman of MediaMorph from New York. We actually do a lot of business with Viacom. Question around what you said earlier, Sai. You're moving from a market of 40 to 50 channels to 500,000 channels. In addition to that, you're going from linear platforms to these multi-platform world. How does one find your content? That's part A. And part B is, how do you handle the whole fragmentation of eyeballs and relationship with the advertisers around that?
Thankfully, we've got 600 million viewers. I mean, there's no complaints about the size of the market. But just one clarification: we have about 250 mainstream channels, 300 channels, but only 70 or 80 of them are available at the household level. Yeah, you're absolutely right. One key challenge is going to be how do we ensure that content discovery is easy, and that's going to be a tremendous marketing and EPG challenge. The science of EPG placement is now coming to India, and we hope we do well there. That's all I could say. Hunt within packs, whether it's the entertainment pack or news pack. Having said all of the above, I think going back to that simple metric of 600 million viewers. Think of a niche channel. Think of a food channel, which looks at one of the 5,000 Indian cuisines. Maybe a Bengali food channel. Your addressable community there is about 45 million households. 10% of that, 4.5 million households, that's not a small figure. So, I wouldn't really worry about going niche. And increasingly, and thankfully, advertisers are paying a premium for special interest, very well-defined communities. And they're paying a premium for time spent, which really is, right. You would see that already in the Indian television, time spent by audiences is moving towards niche and special content channels. Yeah. And finally, you see, I see another opportunity because at some stage I also believe that there will be some amount of free pricing on the distribution market. Currently, there's no free pricing. The average revenue per household in India is $4 for 200 channels. Now that's a steal. Now at some stage we expect that to change, and that will do very well for niche channels.
Well, I'd love to take more questions at this point, but I've been told that we need to move away from the stage because other people are waiting. But in any case, I think we can just continue the discussion outside. But a warm round of applause, of course, to our distinguished panel. Of course, we had Bob Bakish, President and CEO of Viacom International Media Markets. Thank you very much. and of course Sai Kumar, Group CEO of Network 18, one of India's largest media networks. Thank you very much both for a very insightful conversation. And yes, I'll be seeing you throughout the day. Make sure to continue that conversation because it's a very interesting one and lots of money to be made as well. Thanks again.